Hello there, this is FairBinaryOptions.com, and we are continuing our how to trade a specific currency pair projects here, with this time talking about the US dollar and Swiss franc, and before this we discussed about the New Zealand dollar and US dollar. So let's take this one from here. Let's say that we are discussing about the US dollar and Swiss franc. And this US dollar and Swiss franc, of course, it is being influenced by, or it is traveling based on the economic differences between United States and Switzerland, basically in Europe. So out of the United States, we said that the most important thing to look for is the central bank, where the central bank, or when the central bank is meeting in order to establish the interest rate. And in Switzerland, of course, it is exactly the same. So let's say here Switzerland, the Swiss economy, let's say. And the Federal Reserve is in the United States, and in Switzerland it is being called the SNB, or the Swiss National Bank, the SNB. Now this SNB is quite an interesting central bank because, and especially in this 2015, and I will explain a bit the things that I wanted to say here. Switzerland in Europe is it is a neutral territory, but yet Europe represents the biggest exporting market for Swiss products. You might say, what kind of Swiss products? Well, just think of chocolate, just think of watches, just think of many other industries that are very well represented in the Swiss economy, and Europe is the main exporter. So what happened this 2015, when the Euro-Swiss franc peg on the 1.20 has been broken, with the Swiss National Bank basically letting the peg go. Those kind of disruptions are happening when the central bank, or this kind of central bank interventionism, takes place. So the Swiss National Bank, it is meeting every 6 weeks to reinstate, or to look for the state of the economy and to establish monetary policy. As you very well know by now, in Switzerland now we have, as well as in Europe basically, we have negative interest rates. Not only that they are negative, but they are way into the negative territory. So negative interest rates in Switzerland. The most important thing when a monetary policy takes place, is also the press conference. And on the press conference, one should look not only at what the actual interest rate was, but what the signal is going to be when moving forward. US dollar Swiss franc is a pair that basically traded only to the upside, only to the downside in recent years, because of the Swiss franc. It is being interpreted as a safe haven. So Swiss franc has a role of safe haven. What does it mean? It means that when people are looking for a safe place to park their money, then they are sending their money into, or investing into Swiss franc. When you buy the Swiss franc, then the US dollar Swiss franc moves to the downside. The central bank, because they are a higher currency, it is hurting exports. The central bank wants a lower currency, and this is why the monetary policy is easy. The Euro Swiss franc peg has been dropped. The easing is being taken in the Switzerland economy, and negative interest rates are there as well. When compared with Europe and with the United States, actually, because we are talking about the US dollar and the Swiss franc, this one is still a service-based economy. Stay tuned for the second part to check out the things to look for when interpreting the US dollar, or when trading the US dollar and Swiss franc.